Thank you for joining us today, Alessandro Piol. Wanted to hear more about what you're doing with your new fund, and maybe you can start by giving us a little bit of background on yourself and what you invest in.
Yes, hi, Hall. Thank you for having me on your podcast. Yeah, I'm a venture capitalist. I've been in the venture capital business for the past 25 years. I've done a mix of corporate investing for AT&T when I first started running the fund for AT&T Ventures, and also I worked for more financially oriented organizations like Invesco and Vedanta Capital, basically investing in venture companies. I've invested in technology mostly, and I've invested in early stage companies and later stage companies. But today, what I'm focused on is investing in early-stage companies in the areas of safety and security, which means cybersecurity, which is a big piece of it, but also physical security. We're looking at things having to do with transactions. We're looking at risk management platforms, privacy, and the like. So it's a really broad lens on safety and security that can go from algorithms to prevent malware from attacking you to safety issues related to self-driving vehicles, for instance. So it's pretty broad.
At what stage do you invest in? Seed, Series A, Series B, or all of the above?
Our fund is focused on investing in seed and Series A. We have we take a good look at the whole market, and so we follow companies that are also later stage, but the fund itself invests only in seed and Series A.
All right, great. Well, I've noticed many funds are becoming much more narrow in their investment thesis, and it seems you are as well. Why is that, and what are the advantages there?
Well, I think some of it has to do with how the business of technology has developed over the past 20 years. First of all, there's been a progress in terms of the amount of money it takes to start a company. So there's been a cost compression, if you will. It takes a lot less money to start a company today than it took 20 years ago. I remember when I started in the 90s, it would take a few $1 million to seed a company. Today it takes $50,000 or $100,000 to get going. There is no need for a certain type of infrastructure or servers or other things. You can basically rent everything off the web, off the cloud. So it's a lot cheaper to do things today. Because of that, because it's easier to start companies, there's been an increase in the sources of capital. So back then, you only had VCs making investments in young companies. Today, you have a variety of sources. You have VCs, you have angels, you have crowdsourcing, you have corporate investors, and everybody basically invests in certain pockets of the market. When I started in venture capital, there were probably something in the order of maybe 4,000 companies or 4,000 rounds of investments every year. Today, there are tens of thousands of investments being made every year because, again, it takes less money and it takes almost anyone can do it, right? So for these reasons, there is a proliferation of companies. So you have a lot more companies competing for the same application, for the same areas, trying to solve the same problems, and also for these reasons, you have if you're an early stage investor, you have to really, it becomes a much harder problem to have to figure out what company is really unique. So, given this environment, how do you compete? And the only way to compete is really to focus. And you have to focus and build your domain expertise. You cannot. There is a term that's used among early stage investors. That's sometimes you say that the investors spray and pray, so they put a little bit of money everywhere. I don't particularly believe in the strategy. I really think instead that the right way of investing in early stage companies to build your domain expertise, be very focused, and try to understand everything that goes on in the space you invest in. It's also it becomes more important to provide really tangible value to your companies, right? So that not only do you put money into the company? You actually do something that's really tangible. And the way we do it, for instance, is try to help them with other investors. So we have a network of investors and co-investors that will work with us. But we also, and more importantly, probably, we provide opportunities to sell the product. So we have built a network of resellers that around the world, they actually are focused on safety and security, and we can have our companies talk to some of these resellers and increase their distribution capabilities substantially internationally, relatively quickly, much more quickly than people are used to do usually. The other thing one can do is really try to do something that seldom early stage investors do, which is top-down research. We actually segment the areas in safety and security we want to look at, and we take every segment. We try to look at all the companies that exist in the particular segment with the idea of trying to pick the best. And again, it's a lot of work, but it can deliver some important fruit for us.
Well, there's increased use of data analytics and data tools to find companies and analyze companies. How does that play into your investment strategy?
Well, data is very important. I mean, I don't like to say that because it sounds like a cliche today, but we are very much data driven in the sense that we try to collect as much data as possible about companies. We try to track everything we can track from not only rounds of financing and how a company does in the marketplace, but also we try to track employees of companies and all the important information that can become useful for our own portfolio. So it's more and more this type of activities are data driven, and there is more and more data available, even though the private investing marketplace is still not completely transparent, because obviously you'd have to publish information, right? So if you're a public company, you have to issue annual reports and quarterly reports, and the information is publicly available. If you're a private company, it's a lot harder to find information. Hence, the more information you have, the bigger your competitive advantage. And again, it's harder to do if you try to go after everything. It's a little easier to do if you are very focused on a specific area, which is sort of part of the whole rationale of doing a fund that's focused.
And I assume you provide a lot of support to your portfolio, and the more you know about the space and the companies, the more support you can provide. What kind of support do you end up offering these companies, or what are their needs, I guess, is a better way of asking it? Well,
there are many funds and other investors that try to provide all sorts of support. Some people help them with HR and recruiting, or accounting, or back office, or some do business development, or try to help with design of products and so on. We think a lot of these services can be easily outsourced by people they're very good, to people that are very good, and so it's an area. These are all areas where you should always get the best in class, and it's hard for somebody like a venture fund to sort of be able to provide always the best offer when you provide those types of services. So we tend to tell companies, go outsource the services. You can find plenty of opportunities. Here's a list of what you can find for, let's say, folks that can help you with design, right? What instead we focus on is something that we think is more tangible and harder to find as an outsourced service, which is dollars. Okay, dollars in two ways. One is dollars you need to raise to grow your company. So, as you know, startups raise money more or less every year from they build the companies by raising multiple rounds of financing. So what we do is we try to have a network of co-investors at every stage of the company development, so we can call people up and introduce them to companies, and have people that are competent and knowledgeable in the space that we invest in that can step in and look at the opportunity. If they like it, they'll invest. And we can try to cut the time it takes for a company to raise the next round of financing considerably. The second thing we do that we think is even more unique and tangible is provide a distribution network. So we built a network of resellers that operate in the safety and security industries all over the place. So we have partners in Europe, we have partners in Asia, we have partners in South America, and we can send these partners with a big database of these companies. And every time we start working with one of our portfolio companies, we can send them information about these companies, and we can help them structure a deal with these resellers so they can generate more revenues more rapidly. And to us, that's something that's pretty unique. We don't know anybody else doing this as a venture investor, and it's something that can generate revenues for our companies rapidly, and we also help them with getting there, because if you invest, if you only sell your product domestically, it's relatively easy. You know what needs to be done. But when you sell international, there is a number of issues that you take into account, whether it's localization of the product or whether it's different product packaging or brochures or other information that you need to provide maybe in the local language. And we can help them with all of that, and that's what we do.
Well, it sounds like you can help them expand internationally as well as through different sales channels through your network, and that's a competitive advantage. Not everybody or not most can do that as far as helping them get revenue increasing, because they're either getting money from the investor or getting money from the customer, and they're only going to get so much from the investor, and then they have to get it from the customer. And
exactly,
you can really help them do that, then that's quite a unique value proposition for your portfolio as well. So are you about to go back and raise another fund, or are you still finishing this one up, or what's the next stage for you guys?
Well, we, as you probably know, we can really talk publicly about fundraising plans, but yeah, we know we're making investments, and the venture capital business is essentially one where you invest for 3 years and you commit all your capital, and then you have to raise the next fund. So it's a continuous cycle, and we see opportunities in this space all over the place. So we invest in early stage, and sometimes you see companies a little bit later on, a little later stage. Sometimes you try to find ways to finance those companies as well with the help of our limited partners. So we have when you specialize in something, it gives a lot of leverage in that industry, and we try to find every way we can to generate return of investment for our limited partners across the board.
And so how did you choose safety and security as the market to go after? There's many choices. Why that one?
Well, it was a combination of trying to figure out the opportunity, where the opportunity is today, and undoubtedly safety and security is a huge opportunity, because unfortunately every day you open the newspaper and you read about a different problem, right? But also there is two other things that drove us in this direction. One is that effectively we have experience in this sector. I mean, now it's impossible to be a complete expert in all the facets of safety and security, but I've done a number of investments in cybersecurity and in physical security, and my partner actually has Claudia Iannazzo has a lot of operating experience in several areas in safety and security. So it was an area that we felt comfortable with. We felt that we could complement our knowledge with the help of maybe recruiting some other people or having a network of people around us that could really help us figure out the things that we don't know enough about. But also there is a third reason that is important. It has to do with the nature of this marketplace, the type of companies, applications that we see, and the competitive advantage that these companies can gather by working on some of these areas. many of the solutions we look at are mission critical. So we're not dealing with the products that are nice to have. We deal with a lot of products that are must have. And that, you talk to any investor, it's a lot easier to invest in a company that's a must have product than a company that's a nice to have product, because the nice to have sometimes are just fads, and when the fad ends, then the company's out of business. It's also an industry where there is a lot of regulation, oftentimes legal driven. So companies are customers of these companies are always trying to reduce liability. They're forced to buy product because there are issues they need to resolve, and sometimes they're driven by regulation to resolve these issues. And that gives you a large addressable market, because a lot of people are forced into buying some of these solutions. Also, it's an area where you oftentimes have a high transaction value, in the sense that the solutions that people buy, especially enterprises, help solve big problems that can cost a lot of money if they're not solved, or if we cannot at least act quickly after, let's say, you are hacked. If you cannot act quickly to fix the problem and restore your reputation, right? It's a big product, can be very, very costly. So you have products that can be sold for good value and provide high gross margins just because of this issue. Then it's also an area where you have high customer dependency. You commit to a solution that can help an enterprise defend itself, and it's very hard to uncouple the solution from yourself after a while, right? So you're dependent on this company, and you're going to keep buying their product. And that also gives you higher customer retention rates, which is a good thing. And finally, going back to what we were talking about before, it's a lot of the solutions today are data driven, right? And if you're first to market, if you are somebody that a company that can actually gather a lot of data that can be helpful as we build the product up. It can be helpful to, if you can take data from a customer and sort of use it, obviously anonymously, for another customer in terms of detecting problems, you're much better off. You can build a great competitive advantage by gathering data, and we like that a lot. So, there is a number of characteristics here in these types of companies that are very attractive for an investor.
I understand. It sounds like there is a very high value proposition there, very critical need by the user, and a very specific ecosystem that you're working with. So it all makes for a great opportunity for a focused effort in that area, because the need continues to grow from what I can see as well. But, well, cool. Well, that's a very good description. It sounds like you have a great investment thesis there. Congratulations on setting that up. Were there any, as we close it out, are there any other comments you'd like to make about your investment program and how you guys work?
Well, we are a small team. It's only 2 partners, and we have 6 venture partners that work with us. They don't work with us full time, but they get involved in the specific projects. The other thing we've done, we have built a large expert advisory network of folks who are C-level executives in various companies across multiple industries. So they go from financial services to healthcare to manufacturing and so on. Because, as I said before, it's hard for us to be experts of everything. So when we see something that maybe it's applicable to healthcare application, then we have somebody we can call in that industry that can help us at least direct ourselves. And these are all people that are touched by problems in safety and security. So these are people that maybe CISOs of a company or C-level executives have to deal with some of these issues, so they can point us in the right direction. And so we try, again, we try to leverage our network as much as we can, whether it's a distribution network or the investor or co-investor network, or whether it's our expert network. We try to make that work for us. Aside from that, we just do a lot of work to find the best companies possible to invest in. And the last thing I would say is that it's not only a very it can be a very profitable investment thesis, but we also think it's a good thing to do because these problems are big problems nowadays, and some of them are just, we got to a point using technology where some of these things are very hard to control. So to the extent that we can do something good by finding good companies to invest in that can help solve problems, I think that's that's even better. It's almost even better than making money. But make no mistake, we are focused on generating good returns for our investors first and foremost.
Well, very good. Well, I appreciate your coming on and taking time to share your investment thesis with the group, and wish you success with it. And thank you so much for the information you've given.
Well, you're very welcome. Thank you for having me on your program.